And hello, Texas. Don't turn that dial. This is the Fly Mackey Show, and I'm your host, Fly Mackey. Good to be with you tonight. Just got back. Big news with Newsmax coming out with their public offering where they're raising $225 million that they put into the escrow, so to speak, so that they could, go public. It's going to be exciting to see what happens with Newsmax. It's going to be exciting stuff. Let's look at the story over here. By the way, I'm your host, Fly Mackey. Good to have you with me tonight here on Smart Money Culture Television. Hold on 1 second here. Share. And then there we go. Are we up there? Yeah, here we go. Newsmax. Pretty cool stuff. This is from their own website, newsmax.com. Plans to go public, offer shares to investors. Newsmax Inc. is pleased to announce that it will seek to become a public company later this year or in early 2025 with a listing on NASDAQ or the New York Stock Exchange. Interesting. In preparation for this contemplated initial public offering, Newsmax is launching a private placement offering seeking to raise up to $225 million. While achieving significant success, Newsmax has stayed true to our mission of providing Americans with honest and real news. Christopher Ruddy, CEO of Newsmax, said to the company's plans. Now more than ever, especially in this election year of 2024, America needs Newsmax, and you can join with us as an investor, Ruddy said. For a limited time, eligible investors will be able to invest in this private offering. So here's some details. The new private offering is solely available to accredited investors. The current private offering currently consists of shares of the company's Series B 7% convertible preferred stock for a maximum offering amount up to $225 million. Interesting. So one investor could put up to $225 million. The company's subsidiary, Newsmax Media Inc., operates the nation's fourth highest rated cable news channel in the U.S., as well as several media platforms reaching more than 40 million Americans regularly. I want to address that because even though the Newsmax, so cable television has lost 70% of its, this just to put it in perspective, has lost 70% of its viewership. You can go do your own math on it. If you Google it, it's going to tell you something different, that they lost a little here, lost a little there. But ABC, NBC, CBS, and Fox, 70% viewership in the last 4 years. And one of the reasons when folks get surveyed, like when you get a survey and it's asking, hey, would you do a survey? When you're on social media, sometimes it'll ask you, hey, would you do a quick 5-minute survey? Hold on 1 second. Don't go anywhere. Okay. So they've lost cable TV is a dead industry. So you can't really use that as an indicator of who's watching what, because they've lost so many viewerships. You're looking at satellite TV, dish TV, all those are going out of business because they've lost so many subscribers. And when you are playing things that are not suitable to your morals and likes and entertainment value, then let me take out the morals part. When you're broadcasting stuff on your network or your channels that is not entertainment worthy for that household, then you lose subscribers, especially when they're paying. And cable TV, is the most expensive TV out there. Cable TV is the most expensive, and there's nothing on here. These things run from $39.99 all the way up to $257. I don't even think you can get a subscription for $39 anymore, but that's basically what they run. And there's nothing on cable that you can't get on local broadcast TV for free. Are you listening to me? Corpus Christi, Houston, College Station, Beaumont, Texas, Lake Charles, Louisiana, coming to Tallahassee, other places around the country who are watching us right now. There's nothing you can get on cable TV, zero, that you can't get for free on local broadcast television. So if you're paying a subscription, $120, $130, which is the average, is about $140 average for cable, you're an idiot because you can get it for free. Now, don't be mad at me for calling you an idiot, but that's just like going down the street and while you're driving, throwing $140 out the window because it's free on local broadcast TV. You just have to know how to get it. But TV was always meant to be free. It was always meant to be free. The FCC set it up where businesses pay for the TV, not consumers. Not consumers. It was never meant for consumers to pay for television. It was made for businesses to pay for the television. It's really been perverted, what's going on with our television system. And by the way, this is all fine because it's called entrepreneurialism, and anybody can do it. Anybody can go out and start a business. That's what I love about our country. Like anybody today can call themselves anything. We started with nothing, literally with an idea. Somebody said, hey, I'd do some business with you if you had a channel. I'm like, I don't have a channel. And they go, but if you did, then I went out and got me some channels and bam, we built the infrastructure around it. But once again, it was meant for the business to pay for it, not consumers. The consumers they purchase products from the businesses who pay for the TV. So we supposedly fought a revolution over a 2% tax on tea. I don't believe that at all anymore. I don't believe the history and this, and I don't care whether you believe it or don't believe it, but I don't believe what the history books and they taught us in school. I don't. I don't trust. Just because they say it happened doesn't mean it did. I'll do one. I'll even do one further. I challenge anybody who's watching today to go find all those millions of people that were killed, supposedly even in the Civil War. Show where there was one real battle. I challenge you because I don't believe it. I believe there was a war. I don't believe the details of what they said the Civil War was. I don't believe the details of the American Revolution at all. Because we're starting to find out now through archives of, we're in the information age, as Doug Johnson says. You're in the age of information, where now people are going and finding these little huts here and there and here and there, and buildings and basements with all kinds of archives in it. And these things are getting uploaded to the internet, and they're telling a different story than what's being told to the American people in the history books and on TV and all the movies that are made. If you tell a lie enough, it becomes the truth. And then generations and generations and generations and generations go by where, it has to be true because they said so. I don't know. I don't know. I don't believe what the history books are saying. I'm sorry. I just don't. So anyway, we're getting back to the TV here. If you have a brand new smart TV and you're paying for, you do what you want to do. Okay. I'm not putting anybody down. I'm just saying almost everything that has to do with communications and the internet is free. You just have to know how to go out and get it. And nobody here owns you where you have to do anything. Now, I want to talk a little bit about the Invention Secrecy Act. Well, let me stick on this for just a second, okay? And then we're going to do some Bitcoin pricing. And then from there, I'm going to go and we'll talk a little bit about let me pull up our site. Hold on. Don't go nowhere. We're in commercial break here. So there in Texas and Louisiana, when we're broadcasting live into homes, that's why it's called broadcast television. And from here, I would rather you not play any. Continuing to play the same. It's amazing what's happening. Hold on, folks. Hold on, guys and gals. Okay. So getting to and then we're going to get to the Blackguard, State Street, and Vanguard, the Invention Secrecy Act, talk a little bit about crypto, and then Bitcoin Satoshi Vision. Okay. So once again, TV was always meant to be free, and this entire foundation of television has already been laid out. It is built over 100 years ago, and it goes throughout the entire country. Now, when you take, this is why, even though Newsmax has really gained, they've gained quite a bit on the four major networks. They've gained a lot of momentum on them. The last couple of years on how they say they're Trump fans, but what happens is when you go mainstream, they're gonna have, the advertisers are gonna have influence on you when they're giving you billions of dollars. Okay, you have to understand something. When the owners are being influenced by billions of dollars, if they don't have a game plan other than advertising dollars, then they have to abide, and then they are going to be influenced, and they're going to be told what to do by their major marketing, their major advertisers. They have no choice because their whole model is based on advertising dollars. This entire model either lives or dies by ad dollars. You see this? This format here lives and dies. This model lives and dies by the advertising dollars. It lives and dies by it. Because the only way it stays in business is if these major companies spends tens of millions and hundreds of millions of dollars into the billions on their networks. That's the only way they survive. They have no other means of monetization. They're not unless you're ABC. They're not really in the TV business of making movies, even though they've all morphed into that areas where they're being bought out and stuff like that, right? But once again, this particular news model, ABC, NBC, CBS, Fox, Newsmax, has no way of making money on these news platforms unless they sell advertising. And when an advertiser comes to you and says, I don't like that, or you can, for the sake of our company, you can continue to go down that path of that messaging, but you have to change it so that the underlying message is going to come out. That's what they did with Trump. That's what Fox News did with Trump. They stabbed him in the back. That's why they lost, 67% of their viewership. 67% of their viewership went away. When they called, it started with them calling Arizona early. Arizona wasn't over. They totally stolen. And it's been proven. These are all facts now. And facts don't care about our feelings. There's been a ton of people arrested for election fraud and stuff like that. It's just nobody wants to face up to it now that stuff is coming out. Which is what I said to, me, along with who knows how many other tens of thousands of millions of people who sent messages to the RNC like nobody cares about your marketing and advertising. What we care about is that you do something about the voting booths. We still have voting machines. They come from China. What's up with that? These machines are not supposed to be connected to the internet, but they are. Karl Marx says that how you do it is whatever you're doing illegal, while you're doing it, blame it on somebody else. While you're doing it, blame it on somebody else. While you are doing it, blame it on somebody else. And that's exactly what the political world does to each other and to us. Yeah, the Republicans are in on it too. I don't trust these guys. I'm voting Republican because I have to. I believe it's the lesser of the criminals, but they're all criminals. I tell you, Warren Buffett said the best. He could clean up our deficit in 5 minutes, literally. First time our budget went over 3% of GDP spending, that anybody that was in elected office would automatically at that point no longer be eligible for re-election, which means it's a wrap. Go ahead and screw it up, because come the next election, you're not even eligible to run again, which means a whole new group has to come in. And every time somebody does something like that, would straighten it up. It would take a while, and the Matrix would fight back, as Elon Musk said. They would fight back. There would be a fight. That's why I was disappointed, because I'm a huge Trump fan, just because I like him. And he's a businessman, and we need somebody. But when he didn't come in, and he said so, he said he thought he knew, Washington. He thought he knew the politicians, and found out the ones that they said he could trust, he could not trust. He's a little smarter this time around. So hopefully when he goes in, because now he should know, they tried to murder him. Our own government tried to murder him. I'm not suicidal, by the way, but our government tried to murder him. Getting back to this right here, I don't know why Newsmax didn't stay private, but it's neither here or there. Neither here. They're on the same network that we're on, so I can't be too mean to them. On Winsong Communications here in Houston, they're channel 21.1. I'm 21.4, so I'm 3 channels away from the #1 channel. So but there you go. 100%. It's going to bring a lot of advertising dollars into the corporate company here. So I'm really happy for the company. But once again, this was all made to be free, and it was made for, and I talk to station owners all the time. I'm constantly talking to them. But once again, when your whole model depends on advertising dollars, that's what you get. Hold on a second. I sent a note to these guys. I don't know why they keep playing it. Very interesting stuff, okay? But once again, that's kind of the setup. So we were doing our research on Vanguard and State Street, and we'll get to them in just a second. I want to go over some. We'll go over this in just a second on this. Let's look at some crypto news. That coffee's good. We. Yeah. We better be careful. We better be careful. Okay, we are back. Hello, Texas, Corpus Christi, Houston, College Station, Bryan College Station, Beaumont, Texas. Hold on. And Lake Charles, Louisiana. Hold on. I turned those lights down. I didn't like them. Only because in the studio, the way the engineer sets them up, they look great. But when I do it, they look awful. So I'm not playing them. I'm not using them. But anyway, we're streaming to 8 different sites, and there ain't nothing showing here. We're going to talk a little bit about crypto, a little bit about State Street, BlackRock, some of these guys. Hold on one second. Okay. All right, I'm back. Not sure what happened here, but something happened here. So I was talking a little bit about BlackRock and State Street and um, Vanguard. I've had enough of the Newsmax story. Love you guys. We love Newsmax. Let's look at. We're gonna. I was wanting to go some different directions, but I want to talk about these guys real quick. So BlackRock is the world's largest company. Now, the way they publicize themselves, they have under management. Um, they have business or assets under management, and then the main, and then they work, and then they get their feelers out working in different directions. And one of the things they do is they buy real estate. They say they don't buy real estate, but it all comes under their umbrella. They say they don't have currency, but they all have it under their umbrella. Just so you know that. They all have, and which is about 25% of the world's market is under their umbrella. You have what they're doing with the ownership of the NASDAQ. About every single company that's on the Futures 500 they own 88% of all those shares. So they own the majority of the NASDAQ. Okay. So once again, and then what they do is they go out on top of that, and then they make deals or business transactions with companies to go out and find the products or services that these companies need, and then they sell it to them. So they go and buy the services and then turn around and sell it to them. And they own majority shares. So it is incredible, the business structure that they built. And you have to be impressed by it. It's very impressive what they've done. And then State Street and Vanguard are facilitators, so to speak, to BlackRock. But those three right there dominate the entire world. So they've jumped up into the family of 13, so to speak, because they're so huge. Now, the problem with BlackRock, Vanguard, State Street is they don't have thousands of years of history behind them like some of these other families that have been around for thousands of years, like the Prince of Liechtenstein, who can trace their roots back, that one family, 600 years. It may be 500. I could be off there 100 years. 500 or 600. Still impressive. It's still the same family. Still, in the people of Liechtenstein, there's not a lot of them, but they love their country and they love their leader. I would too. They treat them well over there. They know how to be, the leader of a country, and they've been doing it for hundreds of years. They're the only country that went to war in World War I think it was, who came back with more soldiers than they left with. Yeah, they won people over who said, I want to go live with you guys. Anyway, these families are hundreds and hundreds of years old and worth trillions and trillions of dollars. So many trillions that it's not even countable. Like, you can't put a number on it. So when they were, the Rothschilds hired an accounting firm to try to figure out how much they were worth, because they don't even know what they're worth. But after almost 3 years of accounting, the accounting firm said it is impossible to even start to calculate. And I think they quit at $5,000. trillion. We live on an old world, folks. If you think that this world is 5,000 years old, you're joking yourself. You're joking yourself if you think this world is, and what they're telling us, it's not true. But once again, I don't want to get into all that. Okay. What I do want to get into is what's going on in the state of the United States, like our economy and how. And I was talking to a group today who I said, here's my ideas on this. And they go, that's fabulous. And I'm like, well, help me get there. It may be fabulous, but we're broke all the time. We're totally scaling all the time. Any money that comes in goes out to scaling. And sooner or later, we're going to have to pay our debts, which we're trying to do. We're working on that, paying debts. But once again, that's part of being an investor too. You guys who invest in businesses, like you once you learn, and this was the group I was talking to today about using the infinite banking system and learning how to become your own banker. Remember yesterday, I don't know if you watched the show yesterday, we were talking about when you put your money into a bank, you sign away your rights. You sign away your rights to the principal that you put into the bank. You don't own it anymore. It belongs to the bank now. Just know that. And any interest that's made on it, because they're going to take your money you bank, you deposit $100. Now, this 100 plus any interest that's made belongs to the bank. The minute you put your money into the bank, we're on a commercial break. We're going to take a break. We'll be right back. And we're back. Thank you, Ricky and Faith, two best engineers in the TV business. And coming on soon, Joe DeMasso. Can't wait. Okay. So, oh, that's good. Good stuff. Okay. So as soon as you put your money into the bank, you give away rights to this right here. Principal and interest. $100. The minute you put your money into the bank, you give away your rights to the principal and the interest that you just deposited. They own it. From that point on, they own it. So when you learn how to take these rights back, they're not doing anything illegal. They laid it out to you in America hundreds of years ago, hundreds and hundreds of years ago, and said this is the way it is, and we just follow along, not realizing that we can do the same thing they're doing to us on our own. Sending me signals. Okay, look at the other 8. Hold on, guys. I got people yippity yapping at me. I love it. They're smarter than I am, man. I am so grateful that people that I'm working with and collaborating with on a daily basis that are so much smarter than me. I'm telling you, if it wasn't for them, we'd be nowhere. And we're going somewhere. So we're really grateful. But we give away our rights to the principal that we put in there and any interest that's made. Because what the banks are doing is what's called fractional banking. They're allowed to take whatever money we deposit and fraction it out by 10 times. So they can take 100 and go multiply that by 10, $1,000, and go deposit $100. Well, they leave 100 into the bank that it's in. So they match your 100, and then they borrow 1,000 off your 100. They take that $100, which is really your money. It's leverage, okay? And they loan that $100 out somewhere between 4 and 10%, sometimes higher, but usually in that range, okay? Then they take the other 900 and they deposit $100 because they're only allowed to do this 10 times. So they divide it by 10, and then they drop 100 per location, and then they loan that out. So if they're loaning it to us to somebody else for 4%, and they're paying us, let's say they say, oh, we love you so much, we're going to give you 4% on your $100. You know that ain't going to happen at all. Hold on one second. Hold on. Okay. And so, and there you go. So they're going to take that 4% that they charge other people at the bank that they're loaning your money to. 4% times 10 is what? 40%. They're making 40% on your $100. And let's say they're generous and they're giving you 4%. So they're making 36% on your money. On your money. And we give up the rights to that principal and that interest the second we drop. That's why cash is trash. Cash is trash. If you really think that your bank loves you so much, they don't hate you, but they don't like you or love you at all. Oh, my banker loves me. I love my banker. Why? Because you like the shaft up the butt? Because that's what they're doing to you. They're reaming you right up the old Katusi. Sorry to be so graphic, but that's exactly what they're doing to you, America. Wake up. If you're going to screw yourself up the butt, it'd be way more pleasurable if you did it to yourself. At least you'd enjoy it. I got problems. I'm so grateful. I am grateful. And I like the banks because the banks teach us. How would we have an example if they didn't teach us? Okay? I'm not against them. I'm just telling you the practices. And that you could take this right back when you learn how to allocate, where to deposit your money and allocate it. Anyway, that's a lot of money to be making. So when you become your own banker and you borrow back your own money, I'll give you an example. I don't know if I'm going to get to the stories tonight. Man, I love this. Let me take a picture of this. This is interesting. Very interesting. That's a lot of work getting this off. I didn't do my hair today. Good job, Ricky. Did Faith tell you we're getting you a second camera, another one? Did Faith tell you we're getting more equipment for you? All right. Before I get to it, you know our stock, and I talk about the same stuff over and over and over again. I put a little different slant on it all the time. And, you know, because I know people get tired of hearing the same stuff. So I put a little different slant on it. But this is what's important. And if I say it enough times, you're going to go to smartmoneyculture.tv and you're going to click that link and fill out that form. Now, we're fixing to change our marketing up a little bit. But once again, like, you can become your own banker. I had a lady, a financial advisor who has lots of following. She's very successful, who said, sounds too good to be true to become your own banker. Why don't you just stick to good old standard banking and business practices? Why give away all your rights to your money? Who does that? We do, because we don't know any better. And she said, it sounds too good to be true. that you could get all that credit that you're saying you can get? Well, 63% of you Americans get credit. 63%. And that 63% has a 700 plus credit score. That's 63%. You're getting credit if you have a 700 plus score. They're going to give it to you. You don't even have to ask. They're going to give it to you. I had a buddy here in Texas just a couple of days ago. The banks just sent him a credit card. He didn't apply for it. That's not really legal. They're not allowed to do that, but they do it. I shouldn't say legal. There's a process of getting credit. They can't just give it to you unless you ask for it. Okay. But this bank did. They sent him a card and had a lot of money on it, and he was happier than pig and slop. And he's a good with his money, so he'll do really well with it. But he didn't ask for it. But this is how they get you. You can have it. You can have it. All you got to do is activate it. Activate it, and it's all yours. That they're allowed to do that. But 63% of you out there have credit. Okay? So let me back up. In 1792 is when our stock market started. You can go Google that part right there. You can Google it and find information on it, where 6 brokers got together and said, hey, this is a new country. And why don't we, instead of buying product and selling it to these guys and expecting them to go out and do something with it and then pay us back, because there is no way for them to pay it back, why don't we sell them a portion of our company? And then we'll go out and make products, and then we'll still sell it to them. We'll still sell it to them. But at least let them give the money to our company so we can go buy the products, instead of us giving it to them on credit, which is how they were having to do that. Anyway, goes back to 1792, and it has done nothing but gone straight up since. The stock market has done nothing but do this. Even during the Depression of 1939 was nothing compared to 1986. But in 1986, we didn't even feel it. For a few days, few months, we felt it. But our machine here in the United States is so big. That's why you got politicians up there stealing from us, and we're letting it happen. We send the same people, Democrats and Republicans. 85% of every person that goes up there, Congress or senators, become millionaires. 85% of them become millionaires. 85% of every elected official we send up there become millionaires. They're pedophiles, they're drunks, they're thieves, they're wife beaters, you name it. They're all kinds of sexual deviants that are up there. Just take a day, and for fun of it, just start investigating the senators and congressmen and women of your state, wherever you're at. Just start doing background checks on them and see how perverted. And I had a penthouse in Tempe, Arizona, on the 30th floor. 30th floor of a huge building. I had the entire 30th floor, and we had athletes and entertainers, local business guys, politicians. You talk about perverts. I'm not going to say any name, because we don't want to get sued, but but I can tell you my opinion on it is they're a bunch of degenerates. The majority of them are degenerates, and I think a good amount of them start out with great intentions, but you get up there and you got these companies like BlackRock, State Street, Vanguard. You've got George Soros, who got really smart. Instead of lobbying in Congress, he started down on the grassroots level, and he gives money to local politicians, the little guy and the little girl running for politics, influences sheriff's offices, judges, school councils. I mean, the majority, and I don't care if you like this, the majority of school councilmen, and if you're one, I'm sorry to put this on you, but you're all perverts and pedophiles. This is what you get. These are the people that you're electing. And as soon as they get in, they get all kinds of gifts and offerings and incentives. You just go read the books that are approved literature for schools. I tried to make a case for my grandson, one of my grandsons, because the way he was talking, and his mother just, mom and dad just kind of blew it off. So it's like you have to cut them off. I don't support them in any way. I love them, but I'm not supporting them in any way because they've chosen a path to go down. If they want to go down that path, they're going to get what they get. If you mess around, you're going to F around and find out. It's your choice. You do what you want. There's too big of a world to go down to worry about what somebody else is doing. If they don't want to do, just go. Keep going. I highly recommend it. If you put in $300 a month for 8 years, compounded 8%, you're going to have a total of $28,000, give or take, invested. You're going to be worth, $1 million plus by the time you get ready to retire. All right, we're going into commercial break. Those of you on the internet, thank you for joining us. Don't go away. Borrow your own money. And we are back. Borrow your own money. So I was with the group today, and we were doing a strategy. And this one guy, so he, man, this stuff's incredible. But he were talking about how he put $1 million, $1 million, whatever it was, $1.2 million into his banking system, and then he pulled out 900,000. And when you do that, you negotiate your terms on your payback. And he paid himself back 900,000 in interest. Did you hear that? He put $1 million in, borrowed back 90% of that, which was 900,000. But when he was paying it back, he set the interest. So when you have your own bank, hold on a second. Banky. Jack and Jill American. Jack and Jill American. I always say Jane and Joe American. I like that too. But Jack and Joe American. Okay? You with me? All right, guys, be quiet. My dogs are barking. They own a bank. Okay? And we start people out with getting credit first. Get the credit first, and then take your credit to the bank. This is exactly what the banks do to you. How about you do it for yourself? You're not doing it back to them. You're doing it for you. Anyway, you put your money into the bank. Okay? Let's say you put in $1,000. Okay? $1,000 into your bank. You're going to pull $900. You don't have to, but you can borrow $900. You can borrow. You can borrow 90% of that within 30 days of putting it in there. Now you have to pay it back. Yes, but it's the same way as if you go out and get a mortgage, you still have to pay that back. Do the math. We're going to change this to 900,000. 900,000 interest rate. 5.5%. And then we're going to pay this back over the term of, let's say, 15 years. Calculate it. Wow, this is beautiful. Look at this. So 900,000 over at 5.5% interest for 15 years. Your monthly payment back into the system would be $7,353.75. The total payment on that 900,000 on that 900,000 at 5.5% is on 15 years comes to $7,353.73. Your total payment's $1.3 million. Your total interest on that is $423,000 on a 10-year payback that you would pay yourself. Did you get that? Let's see what he said. Just look at that for a second. That's the same scenario that you do. Now, with that paying back, borrow the 900, you pay it back. With interest. The interest is yours. The interest is yours. That interest in the payback is yours. So not only do you get the interest, but you get the principal too. Now, typically, if your interest that they're charging you is, let's say, 5.5%, like we did there, percent, since you own the bank, the compounding interest typically is 6%, and that doesn't change. You get to make the spread between the 6%, which is 0.5%, but you get to keep making, so you make money on the spread, and you get to make the 6% on the deposit you put in there, uninterrupted from what you borrowed. So as you continue to make your payments just like to the banks. As you continue to make your payments just to here, just like you would if you were paying the bank. If you continue to make your payments just like you'd pay the bank, you get to make that interest that comes back. Let me get rid of that real quick. Hold on one second. You get to make that interest and your principal, but you get to make the money on the spread. And even though you borrowed your money, because it's your money, you get to continue to make that interest compounded, uninterrupted. Same strategies that the banks use. Anybody can do it. You can do it. They can do it. We'll have to work on the better equipment then. That was just something for right now to get you going. Thank you. All right. So once again, this is a basic system of how it works. You put money in and you start with how much you would really, you start with what you would save. That's how the banking system would start. How much would you normally save? Are you putting away 10% of your yearly income? So this is becoming your bank. This isn't velocity banking that I talk about all the time. I'm constantly preaching velocity banking. This is something totally different than the velocity banking. This right here is where you become your own banker. You're putting your own money away. You borrow against your money if you need it and use it, and then pay it back with your own terms that you make so that you can borrow the money, because the company that's giving you your money back, they're taking the risk because you put it into their policy. So they're taking the risk of continuing to pay that 6%. So you got to be able to make your monthly payments and stuff like that. So when you put stuff together like this, it's not a pie in the sky kind of stuff. It's based on real numbers on what you're able to do. And if you stick to that, just like you do now, where you're depositing 10%. I know how many times have you put money into a savings account, left it there for 4 or 5 or 6 months, and then went and borrowed it. And then it's all gone. And then you continue to put money back in there, and you rinse and repeat for years and years and years. You guys who do that know exactly what I'm talking about. You put money in a savings somewhere, IRA, mutual fund, a quick 401k, savings account. And then you go take it out because of an emergency. So you really want, those of you who are really disciplined, you're better off not even doing it if you're going to do that. But those of you who get disciplined and can put some money away, this is a good system for those who are disciplined. Because that money that you normally pull, you're putting it in here. If you want to borrow it, go ahead and borrow it back. Borrow it back. And just like you're going to go save again, is that payback. And if you continue to do that, it grows and grows and grows. You get to make a little bit of money on the spread, and you get to make money on the yearly dividend. Or, excuse me, the interest that they're paying. And most of these companies pay a dividend. It's your money. In 100 years of doing this, 100 plus years, has these insurance companies where you become your own banker, has never once not paid a yearly dividend. Not once. Not once. It's like the NASDAQ and the New York Stock Exchange. Not one time in its inception has it not given an 8 to 12% return. It just keeps going up and up and up and up and up because our world keeps getting bigger. And just by mass numbers, it continues to grow. Just by the numbers, sheer numbers. Okay? Hold on one second. We're going to look at some crypto here in just a second. I love doing this stuff. You can go to smartmoneyculture.tv/credit and let us help you get credit. That's where it starts. Hold on. It's going to cost you a fee to get the credit because we have a done it for you program. And because we have a done it for you program and we have people on staff, we're going to do the majority of the work, but it costs money. But how much would it be worth to you if we went out and got you 100 grand or 200 grand? Okay. All right. Hold on a second. Okay. So anyway, a lot of good stuff going on. Let's take a little look at crypto. I didn't even get to the stories of the night, but I can tell you this now. What BlackRock, Vanguard, and State Street have done is nothing short of miraculous in the 30 plus years or so they've been in business. I mean, they have really, wow, it's just incredible. That's all. It's nothing short of just genius of how they've taken over the financial industry. Wow. That's all I got to say. Like they have come in and they don't mess around. These guys don't mess around. That's okay, Ricky. It's okay, Ricky. I totally understand. I love it. Thank you, sir. I was just telling Faith that you said it was cheap. It's okay. We'll make it up to you. We'll make it up to you. That's for sure. I promise. I promise. All right. Anyway, I love it. Let's take a little look at some crypto here. Bitcoin trading at $60,542. And here's the story of the day. The trading volume up 21%, traded at $32 billion. Ethereum, $2,616.52. It's up only 6% for the day, trading $11.5 billion. XRP, 59 cents. And this thing is moving really, it's going sideways, okay? And watch out because this thing could go to the moon. We're going to chart it, look at some charts. Trading $1.2 billion, only up 2% in trading volume for the day. And Dogecoin right at 10 cents, down 3% in trading for the day at $581 million. Let's look at Shiba Inu. This one right here, guys. Man, there's been a lot of millionaires made with this coin, but please be careful. The trading volume of this was up well over $1 billion. Trades at about normally 800 million, down to 200 million in daily trading now, down 3.2%. Once again, following the trend of some of these other coins. All right. But this coin right here, look at this. Whew. It still has an $8 billion market cap. So the market cap is still there. But that daily trading volume, wow. Oof. Let's see what that comes to. Hold on a second. I'm going to do some math on this. All right. Yeah, so it's trading about 2% of the market cap, which is okay. It's okay. You want it to be up around 5 or 10%, minimum 5%. But you're doing okay. It's doing okay. But that price is really low. Man, I mean, a lot of millionaires could be made here and a lot of millions can be lost. So, do your due diligence on this stuff, okay? Bitcoin Cash trading at $346.55. And once again, here's the story of the day. It's up 2.46% in daily trading volume at 218 million, trading at $345,000. It's okay, Faith. I love Ricky and I love Faith. These guys, go above and beyond. It's all good, kiddo. I, I, I love. Hold on, don't go nowhere. Don't go nowhere. All right, I'm back. I had to send a message. Anyway, thank you, Corpus Christi College Station. It's actually Bryan College. They're right there. It's where Texas A&M is. Like so many billionaires. Like it's incredible. Texas has like 67 billionaires here. Where it has more billionaires that have a home here in Texas than any place in the entire world. But living here permanently, there's something like 67. We're number 3. Florida has the second most. California has the most billionaires. Texas is number 3 in billionaires that actually hold residence here. But it has more billionaires that own homes here. They just don't have it as their permanent residence. So when crap hits the fan one of these days, if it ever does, and it's going to, it will, it's a matter of time. When crap hits the fans, you know where they're coming. That's why they own homes here, because they're all going to come here. Crying and moaning and complaining, saying, I was on your side the whole time. Watch out when that day happens, because it's coming. Anyway, let's keep looking at crypto for a little bit, okay? Let's go down and look at a couple of more coins. Here's Stellar, which is an old favorite at 9 cents. Has a $2.8 billion market cap, but it only traded 55. It traded 55 million. It's up about 6% for the day. Crypto.com coin trading at 8 cents, traded 6.6 million for the day. It's up 28%. And these guys do a lot of things, Crypto.com. Not just a coin. They do a lot more than that. Hold on, guys. Hold on one second. We're going to go to number 96 ranked. BSV has always been ranked in the top 10 until the last couple of years. And then they got knocked out because exchanges don't like them. But let me tell you something. And remember, you heard it here. BSV is the only one of the 4 Bitcoins that have a utility behind it. Now, Bitcoin Cash is working on it, and Bitcoin BTC has no chance of becoming a utility because they've already decided to go another direction, and they're trying. They're working on it. So they may dwarf into something like Ethereum, but Ethereum doesn't work either. The blockchain behind Ethereum is awful. I'm not putting down Ethereum. I'm a huge fan of Ethereum. It just doesn't work. BTC blockchain just doesn't work. Bitcoin Cash and BSV are starting to work. BSV works. That one works. Like totally works. And if I was to watch out for governments to start adopting BSV. Remember, you heard it here. We don't give financial advice here. This is a news outlet. That's what we're doing. We're giving the news. But I can tell you, watch out. Watch out. Bitcoin Satoshi Vision trading at $43.86. It traded 12,703,000. So those of you who have bought BSV and you spent 20,000, 50,000, 100,000, $500,000, don't lose heart. You may be a little upset that you heard Fly Mackey. You may have even bought some with me and go, that son of a bitch, that Fly Mackey. But you just hang in there. Just hang tight. Hang tight. Because that is the only one of the 4 Bitcoins that has a utility behind it. And one day, you don't know whether that's tonight, tomorrow, next week, next month, next year, that coin is going to the moon, and not necessarily in price, but in value and what that thing is going to do with the blockchain. Because all kinds of businesses are going to sit on top of that blockchain. And it's going to be an amazing thing because they're working on it. So that I tell people, this guy told me the other day, I bought Bitcoin or BSV when it was $400 because you said this and you said that. We're not giving financial advice. But anyway, and I said, so hold on to it. And the price is down to $43. Like, I'm not giving you any advice, but if you got some piggy bank money or you got some extra money that you're going to spend anyway, you're spending on booze and hookers and going to Vegas, how about spending that amount of money on the BSV or whatever? I mean, it's down 90% from the 400. It's down 90%. If it's down 90% or 900%, if you take 43, multiply that times 9 or 10, you get $430. It's down 1,000%. Holy cow. That's 43 multiplied 10 different times comes to 4,300. That's a huge amount. I mean, yes, it's down, but it's like the Shiba Inu coin. Where are we at? Shiba Inu. Like right here. The Shiba coin, they call it Shiba. The SHIB coin or Shiba, they call it Shiba. The token is SHIB, Shiba Inu. It's down to 0.0000141. There's going to be a lot of millionaires and probably a few billionaires. I mean, but a ton of millionaires have already been made out of this coin right here. A ton have already been made out of Bitcoin Cash. A ton of millionaires have been made out of Tron, Cardano, Dogecoin, Ripple, Solana, Binance, Ethereum, and Bitcoin. Tons and tons and tons of millionaires have been made out of those coins. So many millionaires, you just can't even count them. Just remember, it's not profit unless you cash it. Now, here's another thing, too, because we're talking about the housing market and stuff like that all the time. A house is a complete, it's not an asset. It's a liability if you're not keeping it up. And when you buy a roof, when you buy a cheap roof and you spend $20,000, $30,000 buying a roof when you really should put a $50,000, $60,000, $70,000 roof on it and do it one time so you don't have to do it again for 50 years. That money pays for itself over and over and over because you get it over with. And then you get to invest your money on something else. But getting back to this right here, if you're paying on this 900,000, what did we say that was? Let's just say it 6. I heard these guys over here at Valuetainment talking about refinancing. I don't think so. Here's this. Look at this right here. 900,000 at 6.99% for 30 years. Your monthly payment on 900 grand is going to be $5,981.68. But look at the interest that you're going to pay back. $1.2 million. Now imagine you borrowing this from yourself and paying that interest back to yourself. You turn that 900,000 into $2.1 million. Did you get that? You turn that 900,000 into 2 point whatever that was million dollars when you become your own banker. Because now you're the one getting paid on it. It's the same strategy. It works for you just like it works for the banks. They don't have any, you don't need a special license to do this. Anybody can do this. Now, why doesn't more people know it? Because they're not legally allowed to promote it. Can't do it. And they don't want to do it, but they're not allowed to do it. Okay? Let's take a little look at some charting here. A Bitcoin, you see here, You see here where I had it charted? Look at this. Look. So where it has coming down into this cone. See where it's coming down into this cone? And it looks like it's trying to make its way out of it. Now, if it kept going down, because see, it's going down. If it keeps following this, it's going down into the 40s. But here it's coming out of this line. Look at this. It's coming out of it. It's trying to come out of it. See that? It's trying to come out. Instead of following the path down, it's trying to come out. Ooh, that is amazing stuff right there. Bitcoin investors, be warned, legendary MVRV ratio about to death cross. Ooh. Bitcoin 30-day moving average, MVRV ratio, may be about to cross under 365-day moving average. As explained by an analyst in a crypto quant quick take post, the ratio is at risk of going through a death cross, which is exactly what I was trying to show you here just a second ago. When the value of this metric is greater than 1, it means the investors as a whole are in a state of net profit right now. On the other hand, it being under this threshold suggests the dominance of loss in the market. So remember when I said buyer beware? So be careful. Naturally, the ratio being exactly equal to 1 implies the BTC holders are carrying exactly as much value as their initial put in. So they are just at break even. Now here's a chart showing the 90-day, 90-day averages. Look at this right here. So it's trying to say that it's going to come under this right here. And if it goes under this, we're going to lose some people are going to lose some money here. I like this. Buyer beware. Always pay attention to what you're getting out there. Bitcoin volatility ramping up. Volatility is always good. What that means is that it moves. And that's great. Amazon used to move 10 or 20%, sometimes 30% a day, usually 10 or 20% a day. When you have a coin that's moving 10% a day, there's not a trader in the world that does not love that. So when you hear people say, watch out, it's dangerous, it's volatile, don't listen to that. They're just scaring you. That's what these news shows do, okay? That volatility is good. Let's dummy it down, caveman style. Volatility, good. No volatility, bad. You make money when it moves. Know the coin or know whatever you're buying, know what it is. Like what you buy. Well, like Warren Buffett says, he researches, they buy things that they like. And then when they buy it, they hope it goes down. They buy based on the idea that it's going to go down so they can buy more. They bought a ton of Walmart and they thought it was going down. They lost $8 billion because Walmart went up. Because they was hoping it was going to go down. They was going to buy during the dips. And then when it went back up to the purchasing price, the spread would have been $8 billion. Warren Buffett says they lost $8 billion on that. $8 billion on the spread. Because when they buy, they hope it's going down, not going up. And then they make their money in that spread from where they buy to the dip. So be careful when you listen to these guys like Buffett, who said Bitcoin was rat poison. What you don't think these guys were buying or leveraging? They don't have to buy Bitcoin to leverage into the crypto market. Now I'm getting into some stuff that may be a little bit complicated for some of you guys out there, but it's okay. That's why the SEC doesn't want non-accredited people getting into the business here. Bitcoin's volatility has passed the levels it reached during its all-time high in March and continues to rise. Traders think this could be the catalyst. Volatility, no. Volatility is when it moves. Okay, let's go with it. But to trigger the rally, Bitcoin, they're saying, must first hold above 61,000. Well, duh. Successfully retest 62,000. No, disagree with this whole article so far. We're only 2 paragraphs in. Bitcoin, after a big slump in volatility levels, it's been moving. Let's take a look. This is a daily chart here. And let's go all the way back to March. So here's the funnel that has been trading in. Let's get rid of this. Remove it. Just remove that. We're still in this downward trend here, but it's been trading right here. It's been trading in this. It's been trading in this. You see this right here? I had that funnel that they were talking about in one article. See this? It's been trading in this right here. That's 60,000 to 60. That's a $9,800 or $9,000 trading area here. That's pretty volatile. That's 15%. That's pretty volatile. That's what I call volatility. That's volatility. That's movement. Where it's been there's nobody here. I'm telling you now, if you made 10 or 15% on your money, you're going to be happy for the year. I mean, just for the year. Imagine doing this and continuing dollar cost averaging when you're purchasing, when you're buying this, a little bit here, a little bit there. Michael Saylor and his group, those guys buy today. They're buying today at the highs. They buy at the highs. I think they spend $1 billion at the highs, but a lot of companies do. And then they, when it dips, they're buying back again. And that money they make from right here, the money they make from here when they buy it, from here to here is the spread. And then they can sell this if they wanted to, because they made it here. They made their money back from here to here, which is what Warren Buffett was talking about when they bought that one stock. They bought it here, but instead of coming down, it went up, and they were projecting that it was going to go here. But when you call something rat poison, or you say, don't buy this, they've already bought it when they're telling you not to. So you stop buying it, or you sell what you have, and then they just come up and scoop up what you got rid of. Called buying the news or selling the news. But I love this right here because that spread right there, there's a lot of money in there. And going back to Warren Buffett, you was talking about that recently, how they lost $8 billion on that one purchase. $8 billion because it went up when they bought it instead of down. And they always expect it to go down so that they can buy in those dips. And once again, the money that they're making, I don't know, I said this like 10 times already. The real money is not buying it here and it goes up in value. The money is when they buy here and they're anticipating through their charting. By the way, don't think for 1 second they haven't charted this and go, we believe it's going to this level. So let's buy here because we believe it's going down to this level right here. And by charting correctly, you know, the trends are going to lead you exactly to those places every single time. And those with the real money make that happen. They make it happen. Okay? So that spread from here to here as it went down and they started buying is where he said they lost that $8 billion. Incredible stuff. But you can see this trend. Here's where it was trading. And in July, so the last month and a half, the last 2 months, we've added this extra channel right here. We've added this extra channel right here. And there's not a lot of support. There's not a lot of support here because as you see here, this is a daily chart. And when it went from here, this is a 1, 2, 3 day where it went massive buying and then up to your all new highs here. So there wasn't a lot of movement into this channel. So as it come down in here, there's not a lot of support in here that came from here. Now further over, yes. Somewhere in here. See that? See that? So there's more support. There's quite a bit of support here. And this is what it's relying on. This is the support of people who did not sell in here to support this right here. So when it went up, didn't have any support going down, but you saw what I just showed you. There's a lot of support from back in the past to keep it in here. And this is why it's going sideways, because you have a lot of people that bought right back here in here that's trying to take profits, and some of these and they're strategizing. So there's a lot of money here. And a lot of money here. See this? All this money in here. Billions and billions of dollars. And then it translates over into here. So it's trying to make its way back up out of this channel. So let's see what happens, because it's trying to make a move. And you don't know if it's going to actually do it. But it's talking about making all new highs into the $80,000 range. Well, there you go. If it was to follow this staircase, it could even be more like this right here. Because the $83,000 was really the talk of the town of where the things. So you can see here where it could scale itself up to here. I mean, it could hit that fairly quickly, but it would have to do it by October 1st. And it could do that. It could. Will it? Who knows? Who knows? I mean, it's accumulating. This is accumulating now. You know, I have this charted to 188,000. And based on this right here, that would not make it. It'd make it to 158,000 where I have it charted as well. Well, you could make the case that it would make it to 188. There you go, February of 2025. So it could hit this trajectory. I have it charted at this right here, $188,000, right under 190. And February is pretty close to where I have it at. Somewhere between November of this year and February of next year to 188,000, and then possibly 245,000 by June. But once again, a lot of things would have to happen before, A lot of things would have to happen for that to come true. I still think that you could see this heading right back here under $14,000. You could see this. That would be a little bit more true right there. Right there. Here's the zero. See that? So, I mean, this thing could head in any direction. Isn't that beautiful? And this is a little bit of what they were talking about, except they were talking about it, which I showed you yesterday. You remember when I was showing you that? Let's just do one more real quick, okay? We got a couple of minutes, not much, where it's coming to a, let me get rid of this. Remove that. Where it's coming to this funnel, where this funnel is coming in like this. This is what they're talking about. And they're saying that this thing is getting deadly close to this. Look at that. Yeah. This is kind of what they're talking about right here, guys. Where the purchasing power or the profits of where you bought it, making money, et cetera, is getting really close to that 365-day average where, the average of where Bitcoin was bought and the average of where Bitcoin is heading to is in some analysts' minds, and these guys and gals are smart. These people ain't stupid. They're smart people, are saying we're right at that point where this thing could dip down. And if it does, there's going to be, some major losses. But once again, if you don't sell, you don't lose, right? The old Warren Buffett, Michael Saylor. And matter of fact, this is where these guys love that because they want it to dip. And once it dips, they're buying down there because they're going to make their money in that spread as it goes back up. I mean, you could draw this out into a monthly chart. That really looks stupid too when you, well, not really. Look at that. Look at that. I love this stuff. When you draw this out by the month, and you're going all back to 2019. First of all, you see the cone that I did right here, and it's coming. This is what they're talking about. Look at this, and this is how it plays out. This is why I do what's called simple charting, so that the average person can see this. Look at this. You see that I am right on the money. Look at this. Look how eerie close that this is on a monthly. Look at this. Look at this, guys. You can't get any better than this. Well, you can, but this is amazing. And by the way, you guys saw me how I just took it and then I just started putting it together, and so that you can see the averages of where these lanes are. And I've been doing this for so long that it just, you can see it by looking at it. You moms and dads out there know, right? When you see something, oh, I can see that, right? So, and you investors out there too, I'm adding the mom and dads because, when you see something at a house, you see the kids growing and go, oh, I remember here. Yeah, that's the same trend, right? Same way here. But look how eerily close I am in making this channel. Look at this. Wow. Holy wow. That's all I got to say. So here's the channel that I drew just by looking at it. Say, let's look at the channel. And this is all by the month, all the way back into March, right? This is March or February of this year. So this is 1 month, 2 month, 3 month, 4 month, 5 months, 6 months back, right? But you can see where it's been traveling. And then you can see what the analysts are talking about. Thank you, Ricky. Thank you. But you see here where it's coming to this edge where they're saying they believe, watch out, it's getting dangerously close for it to head past this point. And then if it drops here, then there's going to be a lot of mass. There's going to be a lot of people where they talk about are going to lose money. But here's the problem. You don't only lose again if you sell. And the guys, the billionaires, the millionaires, these guys, the big traders, they want you to sell. They want you to say, oh my gosh, we're losing money. That's why they do this. Because with what Warren Buffett and these guys do, let's just look at this one more time. When it gets out of this funnel, like they buy here, they love it when it goes down here because they've been buying, and they really love it when it drops down here into this. We only got a minute or two left. They're going to really love it when it drops down into this area here. So there's still going to be plenty of support here, but all through here, there was no support. So they're going to have a heyday if this comes down. You can see this red mark here where it already tested this down into 49,000. So they know they can go there. I'd have to chart this out on the monthly. I'm not going to do that right now, or excuse me, on the weekly. But this is amazing. Really good stuff. Good stuff, Fly Mackie. Good stuff. Really good stuff. You guys go to Smart Money Culture Television Network and click on that link and sign up. We'll help you get credit. This isn't a dream. This is how business works. Okay. And we have a done it for you program where we'll go out and help you get the credit. You're going to pay us for it, but we'll help you go get the credit. And then when you get the credit, then if you follow some of our strategies, you'll become your own banker. You want to start with the velocity banking and then go to the infinite banking where you become your own banker and make all you're making money on the spreads the whole way using somebody else's money. So when you take this money and invest it, you don't care if you're not making any money on that. You can lose 100, 200, 300,000 because you're going to make that 900,000. That guy here who spent the $1 million, who is going to pay back 900,000 in interest. Now you're going to do that for yourself. So you're not only are you saving all that interest, but then you can afford to go out and put it out as an investment. Okay. I got my engineers bragging on each other. Thank you, Ricky. Thank you, Faith. I am totally grateful to both of you and I have a lot of gratitude for you guys. Anyway, we're going to get there. Wow. A lot going on with Fly Mackie, Smart Money Culture Television, David Mackey, Amber calls me Dick. All right, we're done for the day. All right. See you guys. God bless you.